So you started your own business or you're in the planning stages and you're wondering, what about taxes? How do I manage, file, and plan my taxes as a business owner? This video will break down all the basics about taxes as a sole proprietor in Canada. This is different from an incorporated business. I'll talk about that in a separate video. Before I get started, if you're a beginner or new to Canadian finance, I've created a course for you called Canadian Finance Pro. It's 8 hours long, almost 60 videos where I discuss budgeting, credit, inflation, managing debt, tax, where to invest, and how to invest for beginners. This video is a snippet of what I include in the course. I'll be including this video, plus I'll do a deeper dive into each topic of tax for self-employed individuals. In my course, I'll go through the tax return form and show you how I'd fill it out for my personal business, as well as GST and HST returns. A sole proprietorship is a business structure where a single individual owns and operates the business. In other words, if you have a side hustle, a side job, you sell things online, or you quit your full-time job to start your own business. As the owner of a sole proprietorship, you are considered self-employed and are responsible for reporting your business income and expenses on your personal tax return. If you're self-employed, you have to file your taxes by June 15th of the following year. But if you owe taxes, they must be paid by April 30th. So file your taxes by June 15th, get a time machine, go back in time 45 days and pay your taxes. Welcome to Canada. I have a full-time job and I have a business, so I can file by June 15th if I want, but since I usually owe taxes, I file by April 30th to avoid any penalties. If you're filing your own taxes, you'll use Form T2125, Statement of Business or Professional Activities. It's used to calculate your net business income, which is the amount of income you have left over after deducting your business expenses. You'll also be required to pay income tax on your net business income at your personal tax rate. Since this is not a corporation, there is no business rate. You don't get the small business deduction. There is no small business rate here. This is considered personal income. Again, since I have a full-time job, my business income is added on top, so I pay almost 50% tax on my business income. This is outside of goods and sales tax, GST or HST, harmonized sales tax, depending on where you live. If you have over $30,000 in revenue, you have to charge, collect, and remit the HST or GST to the government. If you're wondering, how to even do that? What does that mean? How do I file? Where do I start? You can go to the CRA website. I recommend having a My Account, even if you aren't self-employed. Click on the GST or HST portion to get a number or to file your return. That brings us to business number. Does every self-employed Canadian need a business number? No, but if you want to file something with the government or collect GST and HST, you'll need a business number. Even if you're not earning $30,000 a year in revenues, you can get a business number and just file nil returns. Nil returns are just submitting the HST returns with all zeros for the year. That's fine. I'll leave a link or show a snippet to the CRA website. If you're registering for GST or HST, you'll get a 9-digit number followed by RT, then followed by 4 digits. The 9 digits are your business number. RT means you're collecting GST and HST, and the last 4 digits are usually 0001, unless you have multiple HST numbers, it'll be 2 or 3 or 4. If you have employees that you'll need to pay, you'll have the same 9 digits followed by RP. If you're incorporating your business, meaning you're not self-employed, you'll get the same 9 digits followed by RC. So just make sure you're choosing RT if you're getting an HST number. I hope that's not too confusing. It's important to remember that as a sole proprietor, you are also responsible for paying CPP, the Canada Pension Plan contributions. If you were employed with a company previously, you only paid half of the CPP while your employer paid the other half. But if you're self-employed, you have to pay both. You have to pay double, essentially. There's a basic exemption amount, which is $3,500, meaning if you make $3,499 in a year, you pay 0 CPP. If you start making above $3,500, you'll have to start contributing to CPP until you hit the max limit. In 2023, the rate, if you're self-employed, is 11.9%. Check out this chart. The max contribution limit is $65,700 in 2023. So if you had net business income of $65K, you'll pay the max 11.9% of that into CPP. You can't opt out of this. What you can opt out of, however, is EI, employment insurance. It's not mandatory to pay into this when you're self-employed. You have to decide if you'll need it or have use for it. However, if you decide to opt in, if you decide to pay EI, you cannot opt out. It'll be forever, so decide carefully if you need it. You can always opt in whenever you want, but you can't opt out and cancel it. If you have a full-time job and a side business, you might not have to contribute extra to CPP or EI. This number is a max per person per year. It's not per job or per income source. So if you earn $65,700 as a full-time job and you have a side business earning another $65,000, you don't have to pay double the CPP. You've already hit the max amount. You will only pay up to that max amount. We talked about getting a business number. If you start running your own business, I recommend getting a number. But a common question I get is, do I need to register my business with the government? The answer is yes and no. If you operate your business under your own exact legal name, then you do not need to register your business. If your name is John Jones and you invoice and pay people and collect checks to John Jones, is that your business? You're fine. However, if you call your business John Jones Consulting, that's not your full exact legal name. You have to register your business with the government. On a similar note, I get asked if I need to open a separate business bank account, and it's a similar answer. If your business is under your own exact name, you charge clients and you collect checks under that name, which is John Jones, then you don't need another bank account, another bank number. You don't need a business account. However, if your name is John Jones and you have John Jones Consulting, you'll need your own bank account that can accept checks under that name. I think it's easier to have two bank accounts just to keep all your personal and your business expenses separate. It's a lot easier come tax time. The last topic I'll quickly touch on, maybe even most importantly, actually, it might need a separate video, is expenses, or our expenses, which is what I can deduct, what can reduce my business income so I can reduce my taxes. To keep it simple, you can deduct anything you spent to earn money. Anything spent to incur income can be expensed to a degree. They have to be reasonable. Some costs are only 50% deductible, like meals. If you take clients to a dinner, you kept the receipts, you spent $1,000 in 2022 on client dinners. Only 50% is deductible, meaning only $500 can reduce your income. You can't reduce your income by the $1,000. Any transportation fees, business licenses, membership dues, advertising, startup costs, those are all deductible. I have a home office. I can deduct a portion of my home as a business expense, but remember, keep it reasonable. Only 10% of my home is specifically used for my business. Therefore, I can only deduct 10% of my interest and utilities. If you claim 50 or 60% of your home as a business expense, to me, that's a red flag. To the CRA, that's a red flag. You might get audited. They will come and measure by square footage. I have seen it happen. Not to me personally, but I have seen it happen. You cannot deduct a portion of your mortgage. 10% of my home is a personal business, a home office, but I can't deduct 10% of my mortgage. Since mortgage involves principal and interest, you can only deduct 10% of your interest portion. Last item, it's very rare that you can deduct clothing unless it's specifically, words are hard, you cannot deduct clothing unless it's specifically branded with your business or for your business. Everyone has to wear clothes. The CRA knows people will use this loophole to deduct clothing they would have purchased anyway, so clothing is not allowed unless it's specifically branded and used only for running your business. I think I'll end it here. I'll do a deeper dive on all these topics, probably 2 to 3 minutes, maybe 2 to 3 minute videos on each topic in my course. My course is another side business, so I'll be claiming the income and deducting the relevant costs. Like Kajabi, I spent $2,000 a year on the course hosting website, which is Kajabi. That's a business expense. It's the largest one related to my course. That's it for this video. Thanks for watching and tune into the next one.